Good day, everyone. Today I will be reporting the Chapter 22, which talks about the substantive test for intangible asset, the goodwill, and prepaid expenses. Let us first have a review of what is intangible asset. Intangible asset is an asset that is not physical in nature. So intangible asset is non-monetary asset, meaning it has no physical substance. And it will be hard for us to audit intangible asset compared to the tangible asset because what masajay physical substance and we can just audit it through legal documents and certifications. For us to know if intangible asset manisija, it has three criteria, which is identifiable, that it is also controlled by company and has future economic benefits. Then goodwill is another intangible asset. It reflects the premium that the buyer pays in addition to the net value of its other assets. So example of goodwill are customer loyalty and brand reputation. For prepaid expense, it is also an asset, and then it is an advance payment for goods and services. So now we will jump right into the summary of audit procedures classified per assertion. We have here six assertion category along with its primary audit procedures. These assertion category are existence or occurrence, accuracy, completeness, valuation and allocation, rights and obligations, and presentation and disclosure. First, for existence or occurrence. For its audit procedures includes obtaining analysis of ledger accounts for intangibles and examining documents for supporting intangibles. So, existence or occurrence message kinahanglan na kompleto or kinahanglan na to kuhaon at tanang legal documents and certifications sa pag-acquire nato sa intangible assets, sa goodwill or sa prepaid expenses. Then next, we have accuracy. Ang audit procedure is to recompute amortization expenses. So if mag-acquire man tag intangible asset naman joy amortization and we need to compute for its amortization expenses including ana ang remaining useful life. So kaning amortization expenses is similar about sa depreciation expense, but this depreciation expense is more on fixed asset and the correct term for it if it is intangible asset is amortization expense. So we need to recompute. And then we have completeness. For completeness, we need to perform analytical procedures. So atin na mahitabo ang pag-perform nato sa analytical procedures or our analysis. We can compare ang budgeted expenses nato for the prior year versus the actual expenses na nahitabo. So we need to analyze if reasonable ba ang mga expenses, especially katong expenses sa research and development expenses, and we need to validate its reasonableness. Next up, we have valuation and allocation. For valuation and allocation, we need to vouch additions or to acquisitions during the year and evaluate dispositions and write-offs during the year. So, kinahanglan kompleto ang intangible assets na recorded, and we also need to check its entries, the debits and credits. For the debits, it needs to be traced and it needs to be valid, and it must be supported by legal documents. And not all intangible asset pod are from acquisition, but sometimes it is internally developed. So if it is internally developed, we need to vouch ang cost na atong na-incur sa pag-develop anina intangible asset. And then for credits, we need just to evaluate the amortization and the write-offs. Next is the rights and obligations. It is to evaluate amortization policy and verify the computation of amortization. So it is about amortization policy. I-review nato if nabay kailangan i-change, nabay nakuwang sa amortization policy sa atong intangible assets, sa atong goodwill, or sa prepaid expenses. And then lastly, for presentation and disclosure, evaluate financial statement, presentation, and disclosure for intangible assets. So when we say evaluate financial statement, need to determine the appropriateness of the financial statement and the presentation and disclosures sa intangible asset, goodwill, and prepaid expenses. It includes pag-inquire nato sa possible na contingency sa atong intangible asset or i-ensure if recorded ang intangible assets sa financial statements or books sa company. And for the disclosure, the amortization policy sa usa ka company about intangible asset or goodwill and prepaid expenses should be disclosed. That's all for chapter 22, which talks about the summary of audit procedures and substantive test of intangible assets, goodwill, and prepaid expenses. Now let's proceed to chapter 23, which talks about the intangible assets. Then we have an illustration here of research and development costs and expenses. We need to know what are the expenses that are included sa pag-compute sa research and development cost. Here is the first problem. Current corporation incurred the following costs during the year. Cost of activities aimed at obtaining new knowledge, 200,000. Marketing research to study consumer taste, 100,000. Cost of developing and producing a prototype model, 60,000. Cost of testing the prototype model for safety and environmental friendliness, 100,000. Cost of revising designs for flaws in the prototype model, 50,000. Salaries of employees involved in R&D, 50,000. Cost of conference for the introduction of the newly developed product, including fee of a model hired as an endorser, 100,000. Advertising to establish recognition of the newly developed product, 70,000. Cost incurred on search for alternatives for materials, 40,000. Cost of final selection of possible alternatives for a new process, 33,000. Troubleshooting during commercial production, 25,000. Periodic or routine design changes to existing products, 10,000. Modification of design for a specific customer, 100,000. Payments made to other company under a contract to perform research and development to current company, 80,000. Cost of design, construction, and operation of a pilot plant that is not a scale economically feasible for commercial production, 50,000. Then cost of design, construction, and operation of plant that is feasible for commercial production, 33,000. Also design tools, jigs, molds, and dies involving new technology, 20,000. Cost of routine, seasonal, and periodic design of tools, jigs, molds, and dies, 22,000. Cost of engineering follow-through in an early phase of commercial production, 110,000. Cost of quality control during commercial production, 35,000. Adaptation of an existing capability to a particular customer's need, 40,000. Cost of acquired building to be used in various R&D projects, 500,000. Then depreciation on the building described above, 50,000. Cost of machine acquired to be used on only one R&D project, 800,000. Radical modification to the formulation of a chemical product, 60,000. And laboratory research aimed at discovery of new technology, 48,000. For its requirement, we need to compute for research and development expenses. So the costs that we need to include are, first, we have cost of activities aimed at obtaining new knowledge, 200,000. Cost of developing and producing a prototype model, 60,000. Cost of testing and prototype model for safety and environmental friendliness, 100,000. Cost of revising designs for flaws, 50,000. And salaries of employees, consultants, and technicians involved in R&D, 80,000. Costs incurred in research for alternatives for materials, devices, products, processes, systems, or services, 40,000. Cost of final selection of possible alternatives for a new process, 33,000. Payments made to other company under a contract to perform R&D to current company, 80,000. Cost of design, construction, and operation of a pilot plant that is not a scale economically feasible for commercial production, 50,000. Cost of design of tools, jigs, molds, and dies involving new technology, 20,000. Depreciation on the building, 50,000. Cost of machine acquired to be used on only one R&D project, 800,000. Radical modification to the formulation of a chemical product, 60,000. And laboratory research aimed at discovery of new technology, 48,000. The total research and development cost is 1,671,000. So, unsa na to paghibaw if that certain cost is included sa research and development cost and it must be capitalized and it is not expense. So, for costs that might be capitalized, first, the cost that incurred should be cost for creating something useful, for creating jud for research and development. And then you can only include costs when you officially started the construction and not before the construction. Mga example na cost ani are those materials used and services na consumed. Then employee benefits arising from the generation of intangible asset, for example, katong mga salaries of employees, consultants that are involved in R&D, and then other direct costs such as fees to register for a legal right, then amortization of patents and licenses, and borrowing costs na capitalized. So, unsa man pod ang mga cost na dili appeal or costs that are only expense or i-write off na nato since wala man siya matay directly making the intangible asset or the research and development. So, ang mga costs na kinahanglan expense are those selling and administrative costs na dili directly attributed sa pag-prepare sa asset, and then identified inefficiencies, initial operating losses, or those expenditure on staff training to operate the asset. It's because naitabo man siya before the construction. And then legal and secretarial costs, then the other pre-opening costs and those costs written off in earlier periods, mga gipang write-off even before, and then advertising and promotional costs, and relocation or reorganization costs. So we have here another problem or another illustration, and here it involves the generation of trademark, which is another intangible asset. So on January 1, Anita Corporation incurred the following costs for the generation of trademark. Cost of materials and services used or consumed in generating the trademark, 500,000. Amortization of patents and licenses that were used to generate the trademark, 25,000. S&A and other general overhead expenditures, 60,000. Borrowing costs arising specifically from the funds borrowed for generation of the trademark, 10,000. Advertising and promotional costs for the product generated by the trademark, 20,000. Cost of employee benefits incurred in generating the trademark, 40,000. Fees to register the trademark, 20,000. Here are the requirements. First, we have to know how much is the cost of the intangible asset. Second, assume instead that these costs were incurred for the generation of the masthead. How much is the cost of the intangible asset? To answer for this specific problem, for the requirement number 1, we need to identify the total cost of intangible asset. And para makahibaw ta kung unsa mga cost na dapat nato i-capitalize, it's just similar to what I have discussed earlier kung unsa man ang mga costs na we need to capitalize. That includes material used and services consumed, employee benefits, there are other direct costs or amortization of patents, borrowing costs. Then, ang atong answer ani is, first, the cost of materials and services used or consumed in generating the trademark, 500,000. The amortization of patents and licenses that were used to generate the trademark, 25,000. Borrowing costs arising specifically from the funds borrowed for generation of the trademark, 10,000. Cost of employee benefits incurred in generating the trademark, 40,000. Fees to register the trademark, 20,000. For the total cost of 595,000 pesos. For requirement number 2, instead of all of the costs were incurred for the generation of the trademark, we need to assume that it were incurred for the generation of the masthead, and we were asked if what is the total cost of intangible asset if it is the generation of the masthead. The answer is 0. All of the above costs are to be charged to expense since cost incurred in internally generated masthead is not capitalized. Even though internally generated intangible asset ang masthead, it is not capitalized but it's written off or it is expense. So, aside from masthead, there are also other internally generated intangible assets that are not capitalized, cannot be capitalized. For example, is internally generated brands, then customer list and items similar in substance, then publishing titles, for example, books and magazines. Then we have masthead, for example, ana ay mga logo for publication.
Good morning once again, everyone. So carrying on with from where Miss Alea left off, so I'm gonna be tackling amortization. So amortization is a systematic allocation of the amortizable amount of an intangible asset. So carrying on, amortization period Amortization period is the depreciable amount of an intangible asset with a finite useful life shall be allocated on a systematic basis over its useful life. Then, amortization method refers to the systematic allocation of the cost of an intangible asset or the cost of a long-term tangible asset over its useful life. So there are four known methods for the amortization method. So first one is the straight line method. Second is the declining balance method. Third is units of production method. And fourth is sum of the year's digits method. So there are kadang given solutions ipakita dira. So let us continue to revenue-based amortization. So this refers to a method of spreading the cost of an intangible asset over its useful life based on the revenue generated by activities involving that asset. However, there's a presumption against using this method because revenue is influenced by various factors unrelated to the consumption of the intangible asset's economic belief. These factors may include inputs, processes, selling activities, changes in sales volumes, prices, and inflations. The presumption against revenue-based amortization can only be overcome in specific cases where A. When the intangible asset is directly measured by revenue, or B. When it can be shown that revenue and the consumption of the intangible asset's economic belief are closely linked. Predominant limiting factor. An entity should choose the predominant limiting factor inherent in intangible assets. So example, the contract that sets out the entity's rights over its use of an intangible asset might specify the entity's use of the intangible asset as a predetermined number of years. Then straight line amortization may be appropriate, or B, as a number of units produced, then units of output method of amortization may be appropriate, or C, as a fixed total amount of revenue to be generated, then revenue method may be appropriate. Revenue method is appropriate to use when the predominant limiting factor that is inherent in an intangible asset is the achievement of a revenue threshold. The revenue to be generated can be an appropriate basis for amortization. Now proceed to patent. So what is patent, DI? So patent is the exclusive right granted by the government giving the holder thereof to exclusively use, manufacture, and sell a product or process for a period of 20 years without interference of infringement by others. So A, when purchased, B, if internally developed. Costs that are expense as incurred. A. Research and development cost. B. Legal fees and other costs of successfully prosecuting or defending a patent. Or C. Legal fees and other costs of unsuccessfully prosecuting or defending a point. So costs that are expense as incurred. So this includes research and development costs, legal fees and other costs of successfully prosecuting or defending a patent. And C. Legal fees and other costs of successfully prosecuting or defending a patent. So carrying on to amortization of patent. The original cost should be amortized over the legal life or useful life, whichever is shorter. Second, competitive patent was acquired. The competitive patent and old patent should be amortized over the remaining life of the old patent. Third, and related patents. So this has two, which has extension of life and no extension of life. So for extension of life, the related patent together with the old patent should be amortized over the extended life. And for no extension of life, the new related patent should be amortized over its own life, while the old patent should be amortized over the remaining life of the old patent. Okay, so let us proceed to the illustration for example of patent. So on January 1, 2019, RIA Company incurred 1 million pesos of research and development costs to develop a product. Legal fees and other costs associated with the registration of the patent totaled 400,000 pesos, and this patent was granted on January 1, 2020. On July 1, 2020, RIA paid 500,000 for legal fees in a successful defense of the patent. On December 31, 2021, the patent was written off due to the advent of a new product coming from the market. So required, prepare all the necessary entries from 2019 to 2021. So here we have the solution for the illustration. So for January 1, 2019, Research and development expense cost 1 million pesos kanang cash or other appropriate accounts na gigamit para mabayaran tong pagkuan sa expenses, so 1 million pesos po. Then on January 1, 2020, we have patent, cash or other appropriate account for the payment sa katong kanina diri sa registration of the patent. Then legal expense, then cash 500,000 for. Then on December 31, amortization expense, accumulated amortization cost 20,000. December 31, 2021, amortization expense, accumulated amortization were 20,000. Therefore, December 31, 2021, again, loss on patent written off, accumulated amortization patent cost, which is 360,000 plus accumulated amortization, which is 20,000 plus 20,000, totaling to 40,000, totaling to 400,000 for patent cost. So now that we are done with patent, let us continue to copyright. So copyright is the exclusive rights granted by the government to the author, composer, or artist, enabling him to publish, sell, or otherwise benefit from his literary, musical, or artistic work. So the rights of an author shall last during the lifetime of the author and for 50 years after his death, and shall not be assigned or subject to license. So there are two costs of copyright, which is developed copyright and purchase. So for developed copyright, costs assigned to copyright consist of all expenses incurred in the production of the work, including those required to establish or obtain the right. And for purchase, cost includes the cash paid and other expenses incidental to the acquisition for the copyright. Then, in the amortization of copyright, the amortization should be based on the copyright's useful life. However, it is acceptable in practice to directly write off the cost of the copyright against the revenue of the first printing. Franchise. What is franchise? So, franchise is an agreement in which one party, called the franchisor, grants certain rights to another party, called the franchisee. So, for franchise costs, so initial franchise fee and continuing franchise fee. So, for initial franchise fee, this includes the lump sum payment for the acquisition of the franchise and all legal fees and expenses incurred in connection with the acquisition of the right. And for continuing franchise fee, this represents continuous payment to the franchisor for providing specific future services such as advertising and for continued use of intangible rights by the franchisee, recognized as revenue when the continuing services are rendered. This is considered as operating expense of the company. So, amortization of a franchise, granted for a definite period and granted indefinitely. So, granted for a definite period, amortized over the useful life of definite period, whichever is shorter, and for granted indefinitely, shall not be amortized but rather tested for impairment at least annually. So, here we have an example for franchise. So, on January 1, 2021, Josiah Company signed an agreement to operate as a franchisee of Luke Company for an initial franchise fee of 10 million pesos. Of this amount, 2 million pesos was paid when the agreement was signed, and the balance is payable in equal annual payments of 1.6 million beginning January 1, 2022. The agreement provides that the down payment is not refundable and no future services are required of the franchisor. The agreement also provides that 5% of the revenue from the franchise must be paid to the franchisor annually. Josiah's credit rating indicates that it can borrow money at 14% for a loan of this type. So, required. What is the carrying value of the franchise on December 31, 2021? So, here we have the solution for the illustration. So, cost of franchise, down payment 2 million. Then present value of payable 3.331 times 1.6, totaling to 5,492,960. So the total cost of franchise as of January 1, 2021 is 7,492,960. So kuhaan na to sa amortization in 2021. So 7,492,960 divided by 5 is 1,498,592. So the carrying value as of December 31, 2021 totals to 5,994,368. So that ends our discussion about amortization. So thank you and God bless. Bye bye. Sorry, thank you. Bye bye.
Good day, I'm Carolyn A. Barreros, and I will be discussing the franchise, leasehold or lease right, and leasehold improvement and trademark. So let's begin with the franchise. So what is the franchise? Franchise is an agreement between a franchisor and a franchisee. The franchisor grants the franchisee the right to use its intellectual property, such as trademarks, logos, and business models for a specific period. Franchise costs can be categorized into two types, which is the initial franchise fee and the continuing franchise fee. When you say the initial franchise fee, it is a one-time payment that covers the right to operate the franchise, and it often includes the training and support. So when you say continuing franchise fee, it is an ongoing fees paid by the franchisee to the franchisor, typically as a percentage of gross sale. So franchises can be granted for either a definite or indefinite period, which affects how the franchise cost is accounted for. So if it is definite period franchise, the franchise cost is amortized over the shorter of the franchise useful life, or the definite period specified in the agreement. So if it is indefinite period franchise, the franchise cost cannot be amortized because the franchisee has the indefinite right to use the franchisor's intellectual property. So instead, the franchisee must perform an annual impairment test to assess whether the franchise's fair value has declined below its carrying value. So this ensures the franchise remains accurately reflected in the financial statement. So here we have an illustration that states that on January 1, 2021, Josiah Company signed an agreement to operate as a franchisee of Loop Company for initial franchise fee of 10 million. Of this amount, 2 million was paid when the agreement was signed, and the balance is payable in equal annual payments of 1,600,000 beginning January 1, 2022. So the agreement provides that the down payment is not refundable, and no future services are required of the franchisor. The agreement also provides that 5% of the revenue from the franchise must be paid to the franchisors annually. So Josiah's credit rating indicates that it can be borrow money at 4% for a loan of this type. So required, what's the carrying value of the franchise on December 31, 2021? So the initial franchise fee paid by the franchisee, which is Josiah Company paid in the franchise for the franchise, is a significant cost. So since the benefits of the franchise are expected to be received over several years, the initial fee cannot be expensed all at once. So instead, it is amortized over the life of the franchise agreement. So the illustration calculates the carrying value of the franchise on December 31, 2021. So the total cost of the franchise, which includes the down payment made in 2021, which is the 2 million, and the present value of the remaining annual payments, which is the 5,492,960. So amortization for 2021, which is a portion of the total cost allocated as expense for that year, by subtracting the amortization expense from the total franchise cost, you arrive at the carrying value of 5,994,368. So, which reflects the remaining value of the franchise on the franchise's balance sheet as of December 31, 2021. So the franchise cost amortizations helps accurately account for the franchise fee as an intangible asset and spreads its cost as an expense. So throughout the life of the agreement. So providing it provides a more accurate pictures of the franchise's value on the financial statements. Next topic is leasehold or lease right. So what is the leasehold? Leasehold is the right acquired by the lessee by the virtue of a contract of lease to use the specific property owned by the lessor for a definite period of time, so in consideration for a certain sum of money. So the cost of leasehold can include a lump sum payment at the start of the lease, an amount paid to acquire an assignment of the lease from the original lease, or periodic rental payments. So a lump sum payment at the beginning of the lease, this is recorded as either a leasehold or account or prepaid rent and amortized over the lease term. Amortization means spreading the cost evenly over the lease period. So if in the assignment of lease, amount paid to take over an existing lease for another lessee, this is a charge to the leasehold account. So if it is a regular rental payments, these are expensed by the lessee and recognized as income by the lessor throughout the lease term. So next is the leasehold improvement. Leasehold improvement are changes made by a lessee or a tenant to be a leased property to make it more suitable for their needs. So these improvements can include additions, alteration, remodeling, or renovation. Example of leasehold improvements include building walkways, pavement, landscaping, driveways, and so on. Upon termination of the lease, these improvements generally become the property of the lessor or the landlord without any compensation to the lessee. So, depreciation of leasehold improvement should be depreciated over the shorter of the lease term or the useful life of the improvement. So, if the lease is terminated early, the amortized cost of the leasehold improvement is considered a loss. The depreciation schedule for leasehold improvements depends on the likelihood of the lease being renewed. If the renewal option is uncertain, the improvements are depreciated over the lease term or the useful life of the improvements, whichever is shorter. So if the lease renewal is highly probable, the improvements are depreciated over the extended lease period or the useful life of the improvement, whichever is shorter. So we have here an illustration of leasehold improvement. So in illustration, January 2, 2018, Bryden Company signed an 8-year lease for office space. Bryden has the option to renew the lease for an additional 5-year period on or before January 2, 2022. So during January 2020, 2 years after occupying the leased premises, Bryden made general improvements to the premises costing $1,080,000 and having an estimated useful life of 10 years. Required compute for the carrying value of the leasehold improvements at December 31, 2021. If Bryden's intention is to exercise the renewal option December 31, 2021 is uncertain or highly probable. So in this scenario, presented, Bryden Company signed an 8-year lease with an option to renew for an additional 5 years. 2 years into the lease, they made improvements to the leased premises costing $1,080,000 with a useful life of 10 years. So requirement number 1, consider the situation as uncertain, meaning Bryden Company is undecided about exercising the renewal option. So in this case, the amortization period is limited to the remaining lease term of 6 years, 8 years minus the 2 years that have already passed, resulting in higher depreciation expense of $360,000 and a lower carrying value of $720,000 at December 31, 2021. So requirement number 2 assumes Bryden Company is highly probable of exercising the renewal option. Consequently, the amortization period considered the extended lease term of 10 years, so 8 years minus the 2 year and 1 year that already passed, plus the additional 5-year period, resulting in a lower depreciation expense of 100,000 pesos and a higher carrying value of 800,000 on December 31, 2021. So the classification of uncertain or highly probable regarding the lease renewal option impacts the amortization period and the carrying value of the leasehold improvements. So let's talk about trademark. So a trademark and a trade name is different. trademark, it is defined as a visible sign that can be distinguishes the goods or services of one business from another. So when you say a trade name, it is defined as the name that identifies or distinguishes a business. So cost of a trademark. So the cost depends on how you obtain the trademark. Like if you purchase trademark, this includes the purchase price and any related acquisition costs such as legal fees. So if it internally developed trademark, this includes expenses incurred to establish the trademark like filing fees, attorney's fees, and other costs associated with securing it. Amortization of trademark. So unlike tangible asset with a definite lifespan, like buildings, trademarks in the Philippines with a 10-year renewals are considered intangible asset with indefinite lives. So this means their cost is not amortized, but rather subjected to an annual impairment test. So in this test, the company assesses whether the trademark recorded value remains recoverable. So if the trademark value has decreased, an impairment loss is reflected in the income statements. So this essentially reduces the trademark's carrying amount to be better reflect its current value. So now we have here an illustration for trademark. So January 1, 2021, Ashley Company bought a trademark from Alicia Company for 4,500,000. Ashley retained an independent consultant who estimated the trademark life to be indefinite. The carrying amount in Alicia accounting record was 4 million. Required in Ashley December 31, 2021 statement financial position, what amount should be reported as trademark. So the illustration depicts a scenario where Ashley Company acquires a trademark from Alicia Company for 4,500,000. So an independent consultant determines the trademark useful life to be indefinite. So the question, which translates to issue or point in question, is what amount Ashley should report for the trademark as an intangible asset in its December 31, 2021 in financial statement. So accounting standards typically dictate that intangible assets with finite useful lives are amortized over the lifespan. So conversely, intangible assets with indefinite useful lives are not amortized. So in this scenario, because the consultant estimates the trademark useful life to be indefinite, Ashley will report the trademark cost of 4,500,000. So in its December 31, 2021 statement of financial position. So that's all my report. Thank you for listening.
So good day, I'm going to continue about the example illustration of the computer software. So as a recap, we're going to have an overview. So it says here that initially developed computer software, costs incurred in creating a computer software product should be charged to expense when incurred until a technological feasibility has been established to the product. Now, what is a technological feasibility? Now, it is established when an enterprise has produced either a detailed program design of the software or a working model. Now, after sa technological feasibility has been established, capitalizable software costs include the cost of coding and testing and the cost to produce the product master. So sa to ma-include kanang sa capitalizable software cost, so naatay cost of coding and testing and cost to produce the product masters. Now, the cost incurred to actually produce the software from masters and package, the software for sale should be charged as inventory. Now, the classification of the computer software, we have here as a rule, computer software is classified as intangible assets. So, muna siya nga, ang computer software, it is classified as intangible asset. Now, ang computer software also is software purchased for resale should be treated as inventory. So, ikatulo, computer software purchased as an integral part of the computer-controlled machine tool that cannot operate without the specific software should be treated as PPE, or the property, plant, and equipment. And lastly, however, if the computer software is not an integral part of the related hardware, it is classified as intangible asset. Now, let's have the illustration. So we have here the accounting for computer software cost. So during 2022, Socorro company spent 2.5 million developing its new QuickSAP software package. Of this amount, 1.3 million was spent before technological feasibility was established for the product, which is to be marketed to third parties. The package was completed at December 31, 2020. So Socorro expect a useful life of 8 years for this product with a total revenue of 8 million. So during 2021, Socorro realizes revenue of 1.6 million. Now, we are required to find these three mga statements. So we're going to prepare journal entries incurred in 2020 for the foregoing facts, and number 2, we're going to prepare the entry to record amortization using the appropriate method on December 31, 2021. And lastly, at what amount should be the computer cost be reported in the December 31, 2021 statement of financial position. So we're going to start with the journal entry sa 2020. Okay. We have here the solution in number 1, journal entry. So we have here the research and development expense. We have here 1.3. Muna siya ang before feasibility. And then computer software cost, which is katong expense nga 2.5 million. And then the 1.3 muna siya i-minus to have this 1.2 million. Nya mo to ang cash or the appropriate amount for the 2022 foregoing facts is 2.5 million. Then ang requirement number 2, saan the pag-entry to record the amortization using the appropriate method. So atong gigamit diri nga method is ang straight line method. So amortization expense, so gyud sa nato na siya pagkuha, ato siyang i-accumulate amortization ang 1.2 million, which is gikan diri sa computer software costs. Ato na siyang i-divide into 8 because diba gi-state diri sa atong problem nga ang machine nagkuan siya, nagsuspect siya of 8 useful life. So mo to siya nga i-divide nimo siya 8 to have 150,000. And then our requirement number 3, what amount should the computer software inig ka December 31, 2021. So we have here the computer software cost, which is 1.2. Ibaw na taasan na nagikan. And then the minusan na to siya sa last accumulated, which is 150. Mo to ang atong carrying amount as December 31, 2021 atay 1,050,000. So again, note that the straight line was used instead of the revenue method of amortization. Okay, that is all about the computer software. So let us now proceed to the website cost. Now, what is a website cost? So a website cost, it is an entity incur internal expenditure of the development and operation of its own website for internal and external access. A website designed for external access may be used for the various purposes such as to promote and advertise an entity using its own products and services. We also have to provide electronic services and sell products and services. So we have here the stages of website development. First is planning. Second is application and infrastructure development. Under here kay kaning stress testing. The reason here is to determine the breaking point or the safe usage limits and to confirm if intended specifications are being met. To determine modes of failure or how exactly a system fails, and to test a stable operation of a part or system outside standard usage. So it is ikuha na siya information sa Wikipedia. So the third one stage is the graphical design development. We also have the last stage, which is the content development. Now, let us proceed to to the example. So, illustration number 1 of the website cost. So, the following costs were incurred by Edmondo Company in developing its website. So, mo ni siya ang mga expenses nga na-incur sa company. We have here the undertaking of the feasibility studies, ni pay siya of 20,000, evaluating alternative product of suppliers of 15,000, purchasing or development hardware of 16,000, obtaining a domain name 8,000, installing developed application on the web server 20,000, stress testing, which is under ato siya sa second stage, and then design the appearance, layout, and a color 40,000. Creating, purchasing, and preparing and uploading information is 15,000. Updating graphics and revising content, adding new functions, features, and content is 3,000. Reviewing security access of 9,000. And lastly, the training employees operate the website is 6,000. Now we have here the requirement. So the requirement is that compute for the website cost to be included as intangible asset. So, assuming the website is developed solely or primarily for promoting and advertising an entity's own products and services. So, ang giingon diri na all expenditures on developing websites solely or primarily for promoting and advertising an entity's own product and services is required as an expense when incurred in accordance with the PAS 38.68. Our requirement here is to compute for the website cost to be included as intangible asset, assuming, in number 1, the website is developed solely or primarily for promoting and advertising an entity's own products and services. Number 2 is to the website arises from development and is for internal or external access and shall be used for placing orders, and the expenditures can be directly attributed to preparing the website to operate in the manner intended by the management. So now we have here the solution for the requirement number 1. So the answer is 0 since all costs are charged to expose. Let us now proceed with the requirement number 2. So here are the expenses: obtaining a domain name of 8,000, installing developed application on the web serve is 20,000, stress testing of 3,000, designing the appearance, layout, and color of the web pages is 40,000, and then the creating, purchasing, and preparing and uploading information of 15,000, a total intangible asset of 86,000. And the following costs as treated expense: undertaking feasibility studies, Moto 20,000, evaluating alternative products and suppliers 15,000, training employees to operate the website of 6,000. So the cost purchasing or developing hardware is treated as a property, plant, and equipment in accordance with the PAS 16. So the following operating costs are treated as expense not unless it meets the criteria for recognition as intangible asset, in which case it will added to the carrying amount of the website costs. So the updating graphics, revising content of 8,000, adding new function features and content of 3,000, and then lastly reviewing security access of 9,000. So that is one of the sample problem when encountering website costs. So making a website, kanang mga entities nga solely nag-advertise sila og kuan sa ilang products. And mo to siya ma-recognize siya as expense sa pag ilang i-advertise sa ilang own product. So that is all. Thank you.
So, good day. My report covers the topics non-amortization of goodwill, gain on bargain purchase or previously called the negative goodwill, the return on average net assets, the recognition and presentation on the financial statement of intangible asset. So for the non-amortization of goodwill, so the goodwill shall not be amortized because its useful life is indefinite. So we know that goodwill is an unidentifiable tangible asset and is recognized only in connection with a business combination. So, however, goodwill shall be tested for impairment at least annually or more frequently if events or changes in circumstances indicate a possible impairment. So, for the gain on bargain purchase, or previously called the negative goodwill, um, if the acquirer's interest in the net fair value of the identifiable net assets exceeds the cost of the business combination, the acquirer shall, so there are two conditions, reassess whether it has correctly identified all the assets acquired and all of the liabilities assumed, and shall recognize any additional assets or liabilities that are identified in that review. So the second one is that if that excess remains, the acquirer shall recognize the resulting gain in profit or loss on the acquisition date. The gain shall be attributed to the acquirer. So, in order to somehow understand the concepts, here is an illustration. So, this illustration can be found on pages 932 to 934 on the book, the part 2 of the auditing and assurance nga book. So the illustration, Aryan Company engage your services to compute the goodwill and purchase price for the acquisition of Rosalina Company. The following data are available for the Rosalina Company. So makita sa given or sa illustration, the given data wherein ang total assets and total liabilities and shareholders equity have the same balance, which is 22 million. So you found out that the investments have a fair value of 1,500,000, and the current assets and the PPE are understated by 1 million and 2 million respectively. All other assets and equities are properly stated. An examination of the company's income for the last 5 years revealed that the total earnings amounted to 8,900,000. The said earnings include loss on sale of equipment during the last year of 300,000 and 200,000 annual bonus of the president. The normal rate of return is 10%. So the requirement for this illustration is to compute for the goodwill and the corresponding purchase price, assuming there are four assumptions: the purchase of goodwill for 5 years, the capitalization of average excess earnings using 10%, the capitalization of average earnings using 12%, and discounted average excess earnings using the 14% rate. So, before we're going to solve for the assumptions, we're going to solve first for the average earnings. So in order to find that, we're going first to solve for the fair value of net asset acquired. So to solve, the first one is to compute for the current assets, which is makita sa given data nga 5 million plus the 1 million understatement, so in total yung 6 million. Then the investments where na fair value nga 1,500,000. Then the PPE given po ng 15 million plus itong understatement ka 2 million, so na 17 million, plus the current liabilities and non-current liabilities, which are 3 million and 5,500,000 respectively. So we're going to compute those data. Then the fair value of net asset acquired amounts 16 million. Then you're going to find the normal earnings. In order to find the normal earnings, you're going to multiply the fair value of net asset acquired and the nominal rate of return. So we have computed the fair value of net asset acquired, wherein in total is like 16 million, multiplied sa normal rate of return just given nga 10%. So you have the normal earnings nga 1,600,000. Then you're going to find the average earnings, which is computed by the total earnings nga 8,900,000, loss on sale of equipment nga 300,000, then the bonus for 5 years na 200,000 times 5, so na 1 million. You're going to, so naka operating income, imo to i-add ang katong values, so naka 10,200,000. You're going to divide the number of years, so 5, so naka average earnings nga 2,040,000. So for the first requirement, which is to find the purchase of goodwill for 5 years, in order to find the goodwill and the purchase price, you're going to state the average earnings which is 2,040,000 mao na amount sa kato atong gisolve ganiha, plus less the normal earnings which is 1,600,000. So naka-average excess earnings nga 440,000 multiplied by the capitalization period which is 5. So naka-goodwill nga 2,200,000. In order to find the purchase price, you're going to add the goodwill and the fair value of net asset acquired, which is 2,200,000 plus 16,000. So you have a purchase price of 18,200,000 pesos. So that is for the requirement number 1. For the requirement number 2 is to the capitalization of average excess earnings using 10%. So for the requirement number 2, this is like the same process as suggest. So the average excess earnings kay 440,000, which was the solution for this was seen sa requirement number 1. Then we're going to divide by the capitalization rate nga 10%. So you have the goodwill nga 4,400,000. In order to find the purchase price, imo lang i-add ang goodwill ang fair value of net asset acquired. So 4,400,000 plus 16 million, you have the purchase price of 20,400,000. Then the requirement number 3, which is the capitalization of average earnings using 12%. Then the first is to state the average earnings nga 2,040,000 divides the capitalization rate nga 12%. So you have the purchase price of 17 million. Then last is just the fair value of net assets and since goodwill naman imong pangitaon. So 17 million minus 16 million, you have the goodwill nga 1 million pesos. Then the last requirement is to discounted average excess rate earnings using 14% rate. So average excess earnings nga 440,000 multiplied by the present value of ordinary annuity of 14% for 5 periods. You're going to compute the present value, so equal na siya 3.4331. Then you're going to multiply katong duha, then the goodwill would equal to 1,510,564. In order to find the purchase price is goodwill plus fair value of net asset acquired. So 1,510,564 plus 16,000. So naka-purchase price nga 17,510,564. Then the next topic tackles about the return on average net assets. So we're in when the normal earnings are based in the average net assets, the procedures for the computation of normal earnings would be as follows. So na upat ka three procedures. Where the first one is to compute for the average assets by totaling the total net assets for a certain number of periods. The second would be to get the average net assets by using the formula total net assets divided by the number of periods. And then the normal earnings would be computed average net assets times the normal rate of return. In order to understand this concept, here is an illustration which is found in pages 934 to 935 sa book, where an illustration is Brenelin Company engaged your services to compute the goodwill and purchase price for the acquisition of Mayumi Company. The following data are available for the Mayumi Company. So makita ang data sa net income and net assets from 2018 to 2021. It is agreed that goodwill is measured by capitalizing excess earnings at 20% with normal return on average net assets at 18%. So the requirement would be how much are the goodwill and the purchase price for Mayumi Company. The solution is first you're going to find the average net assets. So in order to find the average net assets, you're going to add the net assets from 2018 to 2021. Makita dito sa given, which is ang 6,400,000, 8,600,000, 8,800,000, and 9 million. You're going to total the net assets, so nakay 32,800,000. Then you're going to divide by the number of periods since upat man sa kay 2 so nakay average net assets nga 8,200,000. From then you're going to after that you're going to compute for the average excess earnings through the average earnings which is given na po sa data sa illustration nga from 2018 to 2021, which is 1,200,000, 1,500,000, 2,100,000, and 2,200,000. If you're going to add all the numbers na kay total earnings nga 7 million. Divide by the number of years, which is 4, na kay average earnings nga 1,750,000. Then you're going to subtract the normal earnings, which is ang 8,200,000 times 18% na given nga normal return on average net assets. So na kay normal earnings nga 1,476,000. You're going to find the difference of both. So na kay average excess earnings nga 274,000. To find the goodwill, average excess earnings divided by the capitalization rate nga 20%. So na kay goodwill nga 1,370,000 pesos. In order to find the purchase price, imo nga i-add ang fair value of net asset acquired, which is 9 million. So naka purchase price, which amounts to 10,370,000 pesos. So as for the derecognition of the intangible asset, so an intangible asset shall be derecognized or eliminated from the statement of financial position under two conditions: on disposal of the asset, or when no future economic benefits are expected from its use and disposal. As for the gain or loss on derecognition, so the gain or loss on disposal or the recognition of an intangible asset should be recognized in the income statement as gains in profit or loss and should not be classified as revenue. As for the presentation of the intangible assets sa financial statements, the intangible asset is presented as one line item under the heading Intangible Assets on the non-current section of the Statement of Financial Position as recorded by the Philippine Accounting Standards 1. As for the goodwill, goodwill may be presented in two ways, which is as a separate line item under the heading Goodwill, or to be included in the intangible assets, however having the heading Intangible Assets including Goodwill.